Heidi ho, everyone. I think we're live. There we go. Welcome aboard. Great to have you as our trading buddies for this Thursday, the 15th of September, halfway through September already, and goodness gracious me. We'll soon be talking Christmas, will we not? How does that happen? Well, pretty simple. Thank you, Marlon. It's pretty simple. 365 days go and a quarter. Days go by and there we are. It's Christmas again. Not just yet. Hold your horses. We're not quite there. Rightio. Let's get stuck in, shall we? And have a look at the pound versus the US dollar, which is our thing for this time of day, of course, as we get ready for the UK Open. Now, I haven't done my work here yet. This is yesterday's, which was another good trade, another beauty yesterday. It worked perfectly, as did the day before. Wow, look at that. If you managed to catch both of those, you'd be having a decent week thus far. Righto, let's find the range, shall we? And as always, the range between not UK, what's it called? 1, 2, 3, there you go. Third candle of the day on the hourly chart, which is Tokyo Open, and the current bar. That's the range that we want to identify. Let's get rid of that take profit there for now. So that range today is there just above the weekly pivot, top of that bar, and the low of, looks like the current bar, is it? Yes, low of the current bar. So there's the range that we're trying to use to our advantage. And we need to find the midpoint. So the high of the range, which is in between the Tokyo Open and current bar, the high of that bar there is 1.15479. Let's call that 1.1548. And I'll just make that 1.1548 so I know where we're going. Okay. And the low of the current bar is 1.15053. Let's make that 1.1505. Why did I do that? Got no idea. $1.1505. So that's our range established. Now we need to find the midpoint of that range. And we've got 1505 to 48. It's 43 pips, right? So let's go with 21.5, which will be 1.15265. That rings a bell. I think that was exactly yesterday's number, if I'm not mistaken. Yeah, I think it was. There we go. So that becomes our entry point. We are below that entry point at the moment with about a minute and a bit to go. So what we don't want to do is enter on the level, right? So we're not far from it. Need to be away from it a little bit before we do enter that particular trade. Now, for those of you who aren't aware of what we're doing here, we're trying to get a breakout of this range, right? This range between Tokyo Open and current. So if we're near the midpoint, I won't place the order because that's exactly what we're trying to achieve. We're trying to achieve trading the opposite direction, if you like, to where price is at the time. In other words, if price is below the midpoint, we want to trade long. If price is above the midpoint, we want to trade short. It's too close to the midpoint for my liking. So if it stays there, I won't be taking this position, but we will wait until the candle closes and therefore London opens. The reason for this, of course, is what we're actually attempting to do is trade in the opposite direction to momentum. And you might ask me why? Well, it's pretty much because of experience that tells me that the momentum we go into London is not generally the momentum that we maintain. So if this is going short which is where we want it to go, we trade long. And if it's going long, sorry, if the market's going long before London Open, we want to trade short. So we're going in the opposite direction to momentum, basically. This is a bit too close to the entry, but I will trade it. But I'll trade it at very, very low risk, right? Because I'm just not convinced this is the right move. We shall see. I want really price to be down here somewhere, if you like, midway between the stop loss and the entry level. But we will trade it. Righto, let's go. Now again, if you're here for the first time, this is complete test mode. It is not a proven system at this point, so we treat it with kid gloves and trade in micro lots only. So the entry midpoint is 1.15265. 265. Stop loss is the low of the range, which is 1.1505. And we don't want to take profit there. We will move our stops to entry at 1.1548, which is the high of the range, right? But we won't take anything off the table. We'll simply move our stop to entry. Okay, that's all good. TP2 we'll dismiss, and I'll put a target in just a tick. Righto, that looks good to go. There we go, order in the market. Really like to see this pull down here, not take out the low, but pull down here before we actually get taken into this trade. That would be good. Righto, the target is 2.5 times our risk. Now our risk is 21.5 pips, right? We've established that. So 2.5 times 21.5. Quickly, anybody, is 43 plus 11 3/4. 34.75 from here, right? I think that's right. Anybody who's got a calculator might correct me. 34.75 from there. Oh my goodness. Let's call it 1.1561. 1.1561. That'll be our target, right? Doesn't look right. It's not right. Okay, the risk is, 21.5. So you got to go 43, not 33, plus 11 3/4. So 54 3/4, which takes us to 1.158. Let's call it 1.1582. There we go. So that's our target. We will make that red. That's not red, it's deep pink. Lovely color, but not what we want. Righto. So entry here, 1.15265, stop loss 1.1505, and the target is 1.1582 with stops to entry at 1.1548. Goodness me, that takes a while to do, does it not? Okay, we'll take a quick look at the two trades from Tuesday and Wednesday. Tuesday's trade, there's the third bar, so that's Tokyo Open. There's the last bar before London Open. So there's your range. There to there, midway point. Let's go with 1728, 50 pips, 25 from there is 93. Where have I landed? Can't even read that in red. It's hopeless. That's not the midpoint. Miscalculation. 1678, 1728 is 50 pips. 50 from 78 is 28. What? So what? 25. 1603. 1703. My goodness me. My maths are being tested to the ultimate. Right. So there's our midpoint. When London opened, we were here. So we're trading short. There's our entry. There's our first take profit. Stops to entry at that point. Target 2.5 times. Bolted in. That was the beauty. Yesterday, as I said, the entry was exactly the same as today's, 1.15265. And TP1 was pretty much in the same place. And target was just under the daily pivot, which was absolutely perfect and couldn't have worked any better yesterday. So good result for the last 2 days. Hope you've been watching that and learning how to take advantage of it. But at this point, as I said, still not proven, so treat it as such. Righto, let's see if today we can have 3 in a row. That'd be pretty cool, would it not? Now, I see Ash in the room. Hello, my trading buddy. How are you, mate?
Yeah, good morning, mate. Yeah, very good.
In London?
No, it's not cold actually. It's drizzly, but it's not too cold. It's changing. You can definitely see it's the change is on its way.
So I notice you're not outside Buck, pal. Like everyone else.
Not really my thing, mate. If I'm honest, I mean, as I said before, I think here is I'm no royalist, but I'm no Republican either. And my kind of view on the royal family is that they give a lot of people a lot of pleasure, and that's kind of good enough for me. I don't. You
don't have to be one of them. It's not compulsory.
No, I'm not a as I say, I'm neither a supporter or a whatever the other side would be. I don't kind of walk around with a pitchfork trying to get rid of them either. I'm sure there's balances on either side. If somebody was really passionate about the royal family spoke to me, then and somebody on the other side, I could probably make a choice. But without finding those people out, I'm okay with keeping the status quo. I haven't really got an opinion one way or the other. But I won't be going to Buckingham Palace. I would find no pleasure in standing outside, and it is going to be wet today, I think.
Can you believe it?
And seeing somebody's procession and taken sort of beside beside me in a coffin. I don't know what the benefit for my day would be.
absolutely stunned at that. And
yeah,
I mean, it's not as though it was traveling at 2 kilometers an hour either. It seemed to be motoring along and people going, there she goes.
Oh, it's happened, is it? It's already happened. I didn't realise.
Oh no, that was the one where she was going from Balmoral to Buckpell.
Yeah.
Right. So coming home for the final time, all the drama that they go on with. And look, I mean, no disrespect at all, but seriously, when I'm tired and I come inside from the farm and I just want to sit and have a couple of beers and watch the telly, there's nothing else on. It's QE2.
Do you know that's some of my other issue is that all we've had for the last 2 weeks is stuff about the Queen and the royal family, and I'm just not that interested. If I'm honest, mate, I'm just not that interested. I don't really sort of have a direct. They don't really have a direct effect on my life. I find little pleasure. I love the history of the royal family. I think the stories are brilliant, and there's certain kings and queens. Particularly, there's one king. I love the story of King Henry II, with Becket and his son Richard the Lionheart. I love that kind of period, but that's medieval stuff. But as the royal family kind of progresses, then there's very little ties back to that particular point anyway. That particular family line, the Plantagenets, and it's diluted because the whole thing with the kind of royals and the kings then was that it was about how they were going to progress their empire. You know, there was some proper human struggle going on. I mean, we've already had Ardennes coming out and saying that within the next decades that they will be leaving the Commonwealth, and it will be it won't be it will be a Republican in New Zealand. I'm not sure how successful Charles is going to be. You know, he's not particularly popular. I mean, he's going to get the kind of kickback initially, but he's not particularly popular because people still remember, like Princess Diana was incredibly popular, and people still kind of remember that as well, you know. And there are calls for William and Kate to just kind of take the throne instead. And this is something that Nostradamus predicted many centuries ago. That he would abdicate, that he wouldn't last.
The king would abdicate. Wow. Okay.
Yeah, that he wouldn't be there very long. And he doesn't, you know, he doesn't look well. He's very short-tempered. He's quite a short-tempered man, you know. I know he's going through some stuff right now, but yeah, he's not the most patient of men. He was getting really upset about.
Mate, I've got to say he's not real good at trade-ins.
He's not good at trading.
Trade-ins.
Trade-ins. What's trade-ins?
Look it up, mate.
Okay.
It's where you trade something for something else.
Okay. Yeah.
Generally, it's motor vehicles here in Australia. You trade your motor vehicle in and get a new one, right?
Yeah.
So I can't say any more than that, frankly.
Okay.
It's disparaging to a. No, I can't go any further. Anyway, we need not talk about that any further, I don't think.
Yeah.
Because it's got nothing. Well, actually, I got asked the question when Lilybet passed that wonder what it would do to the markets. I said, I have no idea, but very little, I would imagine. I don't think we've seen any reaction from the market, have we?
No, I don't think that had any direct effect on the market at all. I think, you know, what really comes in now is the policy, fiscal policy from the government. And we are seeing fiscal policies put in place from governments really across Europe. And of course, monetary policy from the central bankers, and the central bankers are, on the move. We've seen since we last spoke, CPI data, core CPI data coming in higher than expected. PPI data not much better. Not in this country actually. CPI data in this country was eased off a little bit, as did the PPI, but not in the States. And the market up until the point it happened, and you can see it on your chart. I mean, it's, you know, the charts are basically looking exactly like your one, but some in reverse and some in the same direction as that. Right across the board, you know, whether you go to currencies, whether you go to equities, whether you go to cryptocurrencies, they all did the same thing, you know.
One trade, isn't it, really, at the end of the day?
Yeah, I mean, there was huge, because everybody's kind of, you know, everything is up against the dollar. Gold took a terrible hit, really, and it doesn't look like it's going to get much relief. Under 1,700 now, mate. Gold.
But it's getting close to that golden level again, too, isn't it?
Yeah, and I think it may well go through it. You know, I did try and trade gold a few months ago, and unsuccessfully, it has to be said. And it put me back a bit actually. So I'm staying well away from it, but I am watching it. Silver, interestingly, holding a lot firmer. Now there is a kind of the gold and silver ratio, which may be where we're seeing the benefit, but of course also silver is an industrial metal, and we are seeing markets pop. You know, the last couple of sessions we've started to see it ease back to the upside, which I think is astonishing in many respects. I know markets kind of have to get back to where they were, and we see retracement, but I just don't know what the catalyst for the retracement is. And when there's no catalyst, I would be more inclined to anticipate ranges, you know, before the next kind of announcement comes out, because we got the PPI data and it started to ease to the upside, you know, after the PPI data from the States, which I thought was quite surprising because that also showed inflationary pressure. The United Kingdom in a different scenario slightly, you know, celebrations about the fact that you got 9.9% inflation instead of 10.1%, which, you know, is terrible. The United Kingdom as an economy is in all sorts of trouble. Housing prices are continuing to move to the upside, but it really is in terrible shape, the UK economy. And when we're looking at currencies to trade, and there's a couple, at the start of this week, the heat map effectively, or the data that I kind of churn into a machine, it came out with dollar long, euro long, CAD short, and Swissy short. And if you were to look at all the four, you'd see that the dollar's done really well against the CAD, done well against the Swissy, but the euro's done exactly the opposite. Actually, the euro CAD isn't too bad, but the euro still is finding it difficult to get footing. But I've got to be honest, when the data's kind of punched in, it doesn't anticipate the kind of moves that we saw on Tuesday, because it can't know what's coming, and it can't know what the reaction of traders is going to be. It can only sort of it's kind of backward looking in that regard. But after that initial move, it's seeming more like a knee-jerk reaction to the state of play, and I wonder if that's because what was priced in was a 75 basis point rate hike, and after that CPI data came out, there was an anticipation for a 100 basis point rate hike. And as time's kind of gone on, that people are starting to go, that may not be as likely as we thought. And also, maybe the CPIs from the United Kingdom is just a glimmer of hope that not every aspect of the globe is feeling the same thing. We've got fiscal policy, which is going to cap energy prices here. The same thing's happening in Europe, which again, it's oil and gas that pushed the inflation data so much higher. That could give it some relief. So I guess there's some relief from that. Supply chains are starting to open up. Supply lanes are starting to open up again. So maybe there's some evidence of that kind of going on as well. So there's a few things that suggest that maybe the situation isn't as bad. And of course, if supply lanes open up, then inflation will come down. We'll start to ease back as well. So you've got maybe the energy caps, you've got the supply lanes opening up, which could start to push inflation back down to a more sustainable level. People have priced in a Fed sitting at 400 basis points or 4% in layman's terms, and that's probably by the end of the year. And then they're hoping that they're going to halt there. Anything over 3% is a dangerous place to be. Ray Dalio this morning coming out and saying that there's another 20% to the downside with stocks, and that is a fair call, but then you don't really know what policy is going to be when you make that call to the future, because what we were looking at was inflation data in this country being predicted to be at 20% next year. But now the predictors have all completely flipped because of Liz Truss's government and how they're proposing to cap these energy prices. So if you do that, then it does change the dynamic going forward. And similar to what we saw with Tuesday, impossible to know what was coming and what the reaction was going to be. Ray Dalio making that kind of prediction, it's just impossible to know. You can only say if we were to continue on this current trajectory, this is where we're going to be. This is what's going to happen. 20% stock market crash. Fair enough. And I haven't done enough research to know whether he's looking.
What you've got to take into consideration with the likes of Ray Dalio, who are they're absolutely believable people, because they've been around for a long, long time, and they've seen, have they seen this? Not sure. Maybe they have, maybe they haven't. But what probably is going on there, as much as anything else, is he would have predicted 12 months ago that we're going down a certain percentage number, right? So he's probably defending that position, as well as saying, well, here's the current state of play, and here's what I think is going to happen. So he's
fair point, mate. Yeah, fair point. And this is the difficult thing, isn't it? Because if you hear from Goldman Sachs or JP Morgan, they're incredibly bullish on the stock market. But of course, that's how they make their money, by people investing with them. So sort of trying to kind of scan through information to see who you trust and believe is an impossible task. And I would suggest not doing it. I would suggest not bothering, because you've always got to kind of to try and figure out what's their is there any motive? Is there any alternative motive? When you go and see a financial advisor and they advise you on your finances, are they trying to then upsell you for another 6 months somehow? I don't know. So everything's sort of baked into why they are saying what they're saying.
You should interview financial advisors. The first thing you should do when you walk in the room, say, how much money do you make? What's your salary? And then ask them how many investments they've got and what's their portfolio.
Yeah, you're right, mate. Yeah, absolutely right. Yeah, because if you interview them, at least you get a genuine hold on. Well, I suppose how good they are, but also whether they might start to direct you towards certain things. If they're telling you, go and invest in Tesco, and then you sort of like you find out that they're a 40% shareholder, then you kind of
yes, there's two. That's not a bad way to look at it, actually, because the flip side of that is that they're being paid a minimal wage by the company that are employing them, and they don't have any investment portfolio. You just walk straight out the door if that's the case.
Yeah, I mean, so much better to do your own research, isn't it? But that's I hear that quite a lot from people on the internet. This is what I think, but go and do your own research, and it's like, well, at least give us some tools so we can. What does that even mean? We can see that you've kind of like figured out exactly how you're researching, but how are we to do our own research if you're not kind of telling us?
Give me the secrets, yes.
Yeah, give me some of the secrets at least, sort of like give us some something to kind of give us a chance here, because actually it just sort of like sounds like another way to say go do your own research. So then you realize how dumb you are. So you go, actually, I'll just trust this dude because I haven't got a clue what I'm doing. But do you know what what it all in the end comes down to is that if you can figure out one, I sort of always come back to it. If you can figure out one investment class, it's much easier to do research on that and to find out stuff about that. And then branching out becomes more of a kind of like dip your toe in rather than treating it in the same way as the one that you already know. I mean, I think expanding is a good idea, but you've got to do it so carefully. And I think the crypto market really illustrated that, the amount of kind of things going on with the crypto market. Do you know what I read yesterday, mate? There is evidence that Forbes have discovered that suggests that 50% of the trades in I think they were talking about Bitcoin, but it might have been the crypto market generally. 50% of them are fake, and
what?
50% of them are fake. So basically, and this is what we're talking about how people can manipulate you into thinking that something's better than it is. So an exchange, and I won't name an exchange because I don't know if one of these exchanges has done it, but let's say an exchange, a crypto exchange, wants you to trade crypto. The best way to do it is by making crypto seem quite popular. So they'll take both sides of the position. They'll take one long, one short. They're completely hedged, and all they're doing is putting two trades actually into the market. So it suggests that there are sort of trades going on. And it suggests that there's much more liquidity and much more volume in a crypto market than there actually is. Now, if they were to do that on a specific day, then they can encourage you to kind of get involved in a move. So they can manipulate your the way you influence. And we'll talk about volume in a moment, actually. When you've sort of done your thing, we'll talk about volume in a minute, because I'll show you I'll show the guys how volume is an indicator that can be utilized. And if they are doing this, so they are sort of increasing volume, then it kind of puts people towards it. It puts the retail investor into the hands of any exchanges or any trading floors that offer ETFs or whatever. In fact, they can't offer ETFs yet, but if they offer certain crypto instruments to go and trade. So 50%, I mean, that is a huge amount. So
that's not good.
We're talking about manipulation, and how these things are manipulated. And people always said, I don't like the gold industry because it's so heavily manipulated. And actually, these were the people that were lauding up how amazing crypto was because it's a lot purer, because it is decentralized and everything else. Well, it's not decentralized when you get actors playing like that. That sort of like does mean that one or two people can manipulate the market, and that's what centralization is all about. You know, the fact that you've got one or two players that can push you into specific decisions. So yeah, not great, not a great read, I have to say.
Okay, that's really interesting. Melvin,
Yeah,
haven't answered your question, mate. And the answer is, I think you're talking about the pivots, the indicators. They're the only kind of indicators like things that I've got on my chart. So the daily pivot, weekly pivot, and the monthly will be hanging around somewhere as well. Way up there, look at that. My goodness, actually, have a look at that. Wow, that's got to be a suction cup. Interesting. I'm glad you pointed that out. Not that you pointed that out, but if that's what you're talking about, where do you get them? These are available. Just Google pivots or pivot indicators, and you should be able to download the files for free from just about anywhere. I don't know. Are they available on MT4, Ash? The pivot?
I think they are. Yeah, I'm pretty sure they are. I think if you we got it on expert advisors. Yes, they must be. They must be available on MT4 because I've got it on my other system and it's got no link to ATW. So yeah, they are.
Right. Okay. So you should be able to get them as indicators on MT4, mate. That's if you're talking about the pivots. If you're talking about the lines I've got on my chart, there's simply vertical lines I've placed on the chart to isolate a certain period, which is keep saying it, Tokyo Open to UK Open, right? So that's the last candle prior to UK Open, and that's the first candle of Tokyo session. So that's what they are. Horizontal lines are entry point for today, which is we have been triggered into that trade. That's the first take profit, and I've simply put those horizontal lines on the chart, and that's our target up there. So if there's anything else on my chart that you are concerned about, let me know. But these are the pivots as well, right? It's all about the pivots for me. Hope that helps, mate. Where are we up to? Did you want me to go whiz through the currencies, mate, before?
Yeah, let's do it.
To your
let's do it, and then we'll just talk volume.
That'd be cool. Yep, cool. One order in the market for me today, and it's not that one. That's my mate's charts. It's the Nasdaq. So I've chosen to trade the Nasdaq short as a result of the big bar that we got on Tuesday and the inside bar that we got yesterday. Now, there's a pretty clear school of thought here from myself that if the market couldn't push further than that into the bar of Tuesday, then the bar of Tuesday should be the direction that we need to take. Now, I had exactly the same thought process last week with a game changer bar and inside bar. Now we've got a game changer bar and inside bar again. It's exactly the same, a little bit bigger. I could certainly say that, but I'm doing exactly the same as I did last week, which failed. Right, that trade failed last week because I didn't take profit. I should have taken profit. We got well past 1-to-1. I didn't, and I got burned on that. If we get 1-to-1 here, I can promise you I'll be taking profit at that point. So if you want to follow that one, the entry level is at 11998, so 11,998.00. Got a stop loss at 81 pips, sorry, 173 pips. And my first take profit is just less than half of that, at which time I'll remove 1/3 of the position. But I'll be pretty cool and confident that if we can break this level here, then we're on a bit of a ride down to test the bottom, test that low. And I'd be happy with that. There is a level here, of course, which would provide us pretty much with head and shoulders, but head and shoulders down the bottom of a retracement. Or is it a retracement? We don't know yet. Certainly getting deeper and deeper, that retracement on the Nasdaq, no question. That big monthly game changer bar has me confident that we're going to challenge these lows anyway. So I'm back in Nasdaq territory short. Let's hope it's better than it was last week. It's the only trade I've had. Well, it hasn't triggered. I've had a couple of orders this week, but nothing has triggered. Euro Aussie, I was pretty keen on. Pretty keen to trade it short, pretty much as a result of the top of this broadening or expanding pattern, if you like. Now we've been delivered a tweezer top, double top, call it whatever you want to call it, and we've got a potential for this to go short. I was not waiting for the tweezer top to form. Rather, I was waiting for a lower high, and that has not yet taken place. Very tempting to take that short this morning, I must say. It is a game changer bar, no question. But I drew that line on the charts when I was doing my analysis and said, do I really want to trade into that level? And if you go a little bit wider, you can see why my answer was no. It's been support through here. It's been support through here. It's been support through there, resistance, resistance, resistance. And now it's just doing the topsy-turvy. It's a bit of a teeter-totter on that level. So not convinced that now is the time. And for that reason, I didn't take that trade short this morning. Had you done so, you could have taken a quick take profit level, of course, at DS1. Why not? Didn't even think of that. But I haven't been in front of the charts all day. So it was still a no from me. And if I do get the lower high, I'd like to see the daily pivot tested. That'd be good. And a reversal bar there. Then I can trade it short. So that's Euro Aussie still on my watch list. The other reason I didn't take that is we had Aussie news out this morning, employment figures on the Australian. And they were, well, the commentators are here are calling them solid numbers. I suppose that's the case. But the unemployment rates went up by 0.1%. Is it here or there? Probably not. And I don't think the Aussie reacted too much as a result of that. So still Euro Aussie short, but I want to see that lower high. Still a massive fan of Aussie Kiwi, of course. Not going long, no, trading it short, and I just can't catch this one. It's just too hard. Every time it looks like going short, it recovers. And we have got a double top sitting there now, maybe even a triple top forming. So same applies. I want to see it come to a support level, bounce off it, give me a lower high, and then I can get into that one. Aussie yen was one of the trades of the week, if it did set up, but it hasn't as yet. And I'm still waiting.
I've actually got a trade that is okay. A potential if Emmy's interested, and I'll show you where we're at.
Sure.
Sorry to cut in, but this is a possible one for now. So it's a FTSE 100, and it is for long actually. So I'm looking to sort of like see if we can get up to this daily pivot here. Now, if you are, I don't think I've been triggered. No, I've got a buy limit. So I've got my limit order just at the top of this bar. Let me bring it on top of your screen here. So for you, and it's the weekly pivot. So you can see that the market is above the weekly pivot right now. I'm just going to wait and see if it comes back to the top of this bar. The top of that bar is 73.16. So 73.16 would be the high of it. So it may or may not come back there. I don't know. But the monthly pivot is the target, and the stop would be under this level here. So this is a trend line along here, and you can see a tiny little break. So I don't really want to put it under that bar. So I'd like to put it under that one really. So you're looking at a 1-to-1, slightly better than a 1-to-1 trade if it triggers. If it doesn't trigger, it doesn't trigger. But yeah, it is for a FTSE long. I see the market being pretty keen. You can see this inverted head and shoulders forming here as well. So it's just kind of like just trying to pick it up on the very slight retracement back to this level here. Now I'll draw the inverted head and shoulders if people can't see it. What's this here? Now, of course, the market has been very negative, and we've seen that sort of from Tuesday. But we did see a recovery yesterday. It kind of we did see some downside yesterday, but it held the specific level. And if you look at the FTSE, what I started to look at the FTSE yesterday, and I found quite interesting, is that the FTSE is actually in a daily uptrend. So where you've got things like the NASDAQ, if we look at the daily chart here, then you can see, well, actually, you could probably argue the same thing about the NASDAQ. Yeah, NASDAQ looks very, very similar. So if this is resistance here, then we got a higher high, and this is the potential higher low here. Same with the FTSE. You look at this FTSE here. Let me bring it onto the chart that you guys can trade it on, this one. You look at the FTSE here. This is the area of resistance. We got this higher high here, and it's just trading this higher low back up into the monthly pivot. I don't know if it's going to go too much beyond that, and it may, it might be that we've got a continuation of the trend, but I wouldn't be aiming for too much. I think a genuine one-to-one trade's okay. Yesterday's bar looks all right as well, settling above the weekly pivot. So it looks like there's some room to run in the FTSE to the upside. So that's the trade, mate. Just for a quick FTSE 100 long. If it manages to survive here, I think the news that we saw, the PPI data and the CPI data, has probably now been baked in, and now we start to look towards the Fed and see what happened with the Fed. Interesting with the unemployment rate as well from Australia. One thing that and we got retail sales as well from the United States today, so that could be a real driver depending on what how that number comes out. Looks like we may well rally into that number is the other thing. I wouldn't want to be in this trade beyond probably 1:29 UK time. It's currently coming up to 9 o'clock. Coming up to 20 to 9. I wouldn't want to be in that trade longer than that, because I think things could change depending on what that retail number comes out as. Australia's numbers are actually quite positive for the market, because one of the things that the central banks need to do to control inflation is to control the labour market and to soften the labour market to kind of curb demand a little bit. So I wonder whether that number might well be perceived as a positive print as well from Australia. But that's the idea anyway, mate. Just a quick long trade and see if we can get out before sometime around lunchtime, maybe.
You could put in the chat box. Someone could put in the chat box. Oh, Ash, can you hear me?
Yeah.
Okay. I lost my internet momentarily.
Oh, no problem.
So
no worries.
I have no idea what you were talking about, but anyway, that's all.
Oh, just saying that I'd want to be out by lunchtime if possible.
Oh yeah, I heard that.
Yeah, I wouldn't want to hang around beyond there because of the retail sales number, and they're going to be quite key today. Those retail sales number, just to see how well is the consumer performing. A good retail sales number could really boost the stock market up even more. But if that's starting to look weak, recessionary concerns come back into play. It might even be a positive if it comes in weak. It's possible the stock market rallies off the back of expectations the Fed could hold at 4%. Difficult to know how that one's going to be read. Inflation data was a lot easier. A high print stock market was going to crash. A low print, it was going to continue to rally. But with the retail sales number, that can be perceived sort of in different ways depending on sort of what investors decide to pull out of it. So I wouldn't want to hang around with that one, mate. I'd want to be done by then. So either monthly pivot is done, you stopped out, or you're still in the trade somewhere near break even. That's the way I'd see it, and I'd close the position at break even if it hadn't gone anywhere by the time that number came out. I really want to gamble on what the number's going to do and how people would interact with it.
Cool. Okay, that's sorted. One thing I think is really important at the moment with the currency pairs that I'm looking at is market sentiment. And it appears that market sentiment is kind of on hold, the way I read it anyway, because I'm not seeing anything that's extremely positive in things like the S&P 500. We've had that massive down day on Tuesday. We had a whole day, as Ash is talking about, hold, and I agree with that. I'm not sure exactly where the market is in terms of sentiment right now, but I think the indicators from a currency perspective are pretty cool. And this is one of them. This is Kiwi yen. And this, I think that this was my trade of the week if it's set up. It's kind of there, it's kind of not. And this is the thing with the market at the moment. It's so iffy that I can tell you this is a buy area, right, where we are right now, and the market seems to be buying at that level. Or I can move my trade line just an teensy little bit, and if that candle holds as is, tomorrow it's a sell. And that's kind of where we are, right? I'm getting this signal off this trade line, buy, and I'm getting this signal off this trade line, sell. And it's really, really interesting.
Interesting, mate. Interesting. Now, what happened in Japan? Something happened, didn't it? Oh, trade balances were absolutely atrocious.
Man, it's so hard to put any faith in the yen at all, isn't it? It really
Totally,
is so
mate.
hard.
And you know, the reason that the yen sort of ended up being a kind of hedge against the volatility in the market was because they had decent trade balances. You know, they were a net positive. Maybe it's their current account, but they were net positive, and that just hasn't been the case for quite some time. And yet again, it's kind of happened, which kind of turns people towards the Swissy as a you know, more confident play. But yeah. You know, but yeah, you know, on your technical, on the technical picture here, I agree with you. I mean, I would be drawing the trend line you currently got, but I know that's not the way that you do things, and obviously the way that you approach the market is successful from your perspective. So it's probably not one of those things that you probably should be looking to change. But would it maybe make you think, well, actually, I don't really want to get involved if I can't get the right picture on the trade line here, or on the trend line. I don't really want to be involved in this because I just can't read it properly.
That's exactly what I'm saying. And I think I need, and you know what I'm like, I'm so conservative. But my rule actually states on trade lines, if I follow my rules, that's the line there. Because my rules state that I need as many perfect points of contact as close to the market as possible. So I've got 1, 2, 3, 4, 5 here. But if I move it to there, I don't have as many. So that's what's so confusing. I mean, my bias is short, and the setup with using this secondary trade line, if you like, is telling me I have to sell underneath that bar. I think probably what will happen is, and it'll depend entirely on this bar, of course, where it finishes. I don't think I can be harmed by trading underneath this bar, because if it is going to bounce and buy here, then I'm not going to get in the market. So I think that's probably will be my approach tomorrow. Can't trade it now. But that's really the trade line I need to be using, because it actually fits the bill, fits my rules. So that's where I'm at. Alternatively, of course, if price comes down today, then retests tomorrow, happy days. I don't have to make a decision. It's been made for me. So that's kind of where I'm at with, and this is another indicator, as is Aussie yen, right? Aussie yen's the ultimate, but Kiwi yen is a little bit more indecisive, if you like, but they're both similar, and they're both gauges of market sentiment. And that's why I say market sentiment is so hard to judge at the moment, because this is giving me mixed signals. So that's really the whole point of the exercise was that.
Yeah.
But I'm watching this like a hawk, because, as I said, it is my trade of the week if it does set up, and we'll have a look at that tomorrow. Obviously, we won't be here tomorrow, but that's the way she rocks. Just pointing it out for you. Euro dollar, that's always my go-to, especially on a Thursday, because we can look back and judge and see if the daily pivot has been hammered throughout the week. And if it hasn't, then it makes Thursday a very, very sweet number. And here's the week thus far. Monday, no test. Tuesday got hammered. Wednesday, no test. Thursday, no test thus far. So that's always going to be my go-to. And what I really want to see is price get down to here somewhere and give me a false break of support. That could still happen. I've got a support trade line coming through here. So we're now above that. If in the next 30-minute bar I've got a retest, providing, of course, this closes as a bull bar. If it closes down here, different story. It's got to close above that trade line, right? And then I get a bearish bar that retests this trade line. Then I can trade this long to here. It's a bit tight in terms of, let's say it closed there. Yeah, I've only got about 4 or 5 pips. It's very, very tight. But, you know, there's a 2-to-1 in there if that were the case. 4 pips is not my thing. I'd much rather see 10 at least. But it's there, and I will take a look at it. We will see. What else did I have for the week? I told you about the NASDAQ. The difference between, say, let's have a look at gold, actually. And that level that I'm talking about, which is absolutely key to gold, in my humble opinion, you can see right there. It's 1678 as I've got it. I think Ainsley's got us at 1685. I remember from her commentary on Sunday Market Update. This is absolutely crucial to gold, in my humble opinion. And if I can sniff a short out here, man, I will get short so fast you won't believe it. And the reason I say that is, well, I go back. I don't know how long I've been saying it, but this double top here on the weekly the monthly chart just can't be unseen. And this is the neckline. This is the neckline. And if it breaks, my goodness me, look out.
Could you check a measured move on that, mate? Taking the peak of the middle.
All that.
No, taking the peak of the middle part of the M.
Here.
Yeah, there, yeah. Then down to the neckline. See where we end up. Yeah, brings us back down to, what is it, 1500-ish? Back down to that area.
1450 saying.
Not pretty, right?
No. And then you might get another opportunity because it might retrace and repeat this over here.
Yeah. And
go again. I mean, you can't believe that can happen from a fundamental point of view, can you? I mean, what can change in the world?
Well, this is the question, isn't it? You know, what is driving this market? But in saying that, the dollar is so strong. You know, the dollar has just been on a crazy tear, isn't it? So I guess that's the reasoning behind it. That's where it does start to make more sense.
Actually, that's interesting. What's gold doing versus something like the Aussie, for instance?
Yeah, well, that would be interesting to see. I mean, it's certainly underperforming against silver.
Well, let's look at the euro. Actually, the euro is weaker than the Aussie. Let's have a look at that. Sorry, I'm holding you up. It's the same. It's exactly the same.
You're not holding me up.
Not as bad. But it is at a strong support level at the moment on the 4-hour chart anyway. What's the monthly saying? Yeah, nowhere near as bad, is it? So I suppose you could say it's holding up against the euro a little bit. It's not great. It's not great by any stretch. I don't think I've got it against the Aussie on this one. No, I haven't. But it does show signs of life, I suppose, versus the euro, which you would expect, but certainly not against the dollar. So maybe maybe, yeah, it's all about the dollar. And it has been for ages. You know, we've been saying this for weeks. The
Yeah.
market right now is a dollar story. And
Yeah,
everything's the same.
Undoubtedly is. And you know, really back to it, isn't it, mate? We got a few hours left until those retail sales number, but you know, you've got to be careful in this market around any kind of US announcement ultimately.
Pound's looking a little bit weaker off the daily pivot. We'll see how that goes. We're at entry at the moment. Didn't get the TP1. I don't think I've got anything more, mate, at the moment. Let's go with the volume story.
Yeah, let's have a look at the volume situation, and I'll show you what we're kind of looking at here. Now we've been triggered into this FTSE trade. So this is where we are on the FTSE now. So little bit of upside so far. The monthly pivot is just a bit high. So there's the area there. So it's around about maybe 25 pips or so above where we are. But you know, you possibly look at the monthly pivot. But if you're in the trade, then just look at this area. If it comes up here, which is going to be something like 8 pips below that monthly pivot, just kind of start maybe shifting stops up is what I'll be doing at that particular point. If we can get up to that position there. So let's talk about volume now. If you look at a market now, I prefer to look at the FTSE or the Nasdaq. Let's look at the Nasdaq because it might be a bit more universal for people.
G'day, Lewis. How you doing, bud? Yes, you missed. Oh, mate, you wouldn't believe what you missed today. Lewis is apologising for being late. You wouldn't believe what you missed today. Mate, all good. Good to have you on board as always.
It's good to have you, Lou. Okay. Now, what I'm looking for. So look at this with the Nasdaq, and look at how these rallies kind of come into play. Now, if we go onto this daily chart as much as possible. If you look at where the volume starts to spike. Now, the interesting thing about volume is the time frame that you look on. So when I look at volume, I don't look at a spike here, a spike here, a spike here. What I'm looking for is a period, a 60 or 90-day period. 60 is quite good because it's around about 2 months. So a 60-day period. And when I'm looking at a 60-day period, after that, then I want to know, have we got a spike in volume relative to the last 60 days? So if we look what's going on here, then this area, and if we go back sort of, it'll be about 2 months.
Mate, sorry, just to clarify, why have you picked 60? Is it because it's a cycle?
Yeah, I mean, really, 90's quite good, but just to kind of shorten it a little bit. So I kind of I would look at 90 as well, because as you say, it is the cycle. It is the kind of quarterly cycle. But the reason I went for 60 is because at least then, if I'm already in the 3 month, let's say I'm a month in, then I've got the last month cycle, the last period of the last cycle, and the start of the new cycle. So it's sort of it was kind of in the middle of going too short, which would have been 30, and not too long, but really being able to read, the end of the cycle. I could only read the end of the cycle if I went for 90. So 60 seemed like a pretty good area to go for. But you can do whatever. I mean, when you're coming down to this sort of thing, it's a personal preference, and it's something that needs testing. It's a sort of 25-day cycle. I think is relevant. 200-day cycle is relevant. And anything based on a moving average, I think, is more than relevant. But 60 was 2 months, and that's what I started looking at. But I don't think it matters in many respects, as long as you pick a long enough cycle. What I'm looking for is a spike in volume. So if I look at like this whole period here, really uninteresting. There's not really a lot going on. If you were to sort of look at the this in a 2 month period, we'll put the start of 2021 in, which is there. Here's the start of 2021. And then I'm going to go to the start of March. So here, if you look at this sort of over here, and then look at the next 2 months, this next 2 months was pretty uneventful in many respects. You know, it didn't really, we didn't see anywhere near the same volume as we saw in the first few months. And if you look at what happened to price, we go to there, you look what happened to price, it pretty much ends up where it starts. You know, there's a sort of a dip down here. It does even though this, and this is the interesting thing, this rally was built on low volume. That's the real key that I'm looking for. Does a rally have volume, and does a dive to the downside have volume, or is it on light volume? Well, this is on light volume, which increases the chance of a move back to the downside. But look when the volume starts to pick up down here. Now, if we go in a little bit,
it also gives you the SH1Ts, because you're waiting for a retracement to get into the move. Yet it keeps going up on low volume. You go, what the hell? This shouldn't be happening.
Yeah, absolutely, mate. Now, what happens here is that we see a big spike in volume down here, but then another spike in volume on the hold. And that kind of, because this is the previous 60 days, this is at a similar extreme as the highest point of the previous 60 days. So it kind of gives you an indication that you are at or near a bottom. And then sure enough, it starts to rally again. Now it does rally on the, again, off the back of, we'll put it forward another few. So here. So there's the hold, starts to rally, but it rallies on relatively light volume, sort of like going up. We'll go, which increases again the chance of a retracement if you get a spike somewhere. So you're looking for the next sort of cycle to there. Nothing here, so a relatively calm market you can see here. Then we'll go forward to there. Now look at what happens here. So this is the move. Now I'm not looking at the extremes. I'm looking at, I want to see the average. You know, I want to see sort of like where the line tends to be, and it's around about there. So this is the first volume spike, and it's a big move to the downside. Then there's even further volume spikes to the downside here, and again you get this hold on the highest volume bar. That's the hold, and that preceded another run to the upside.
Mate, with and I've never used volume in my life, but there are a few things that I do understand about it. One of the things that I question is that hold point.
Yeah.
With the volume spike, is it important that the bar or candle is in the direction that you're wanting momentum to take you, if I can put it that way? Is that important?
Yes, because what you really sort of in as much, it doesn't have to be green, of course. It just needs to be a bar which suggests a hold.
Yeah,
you know, you'd want to see a price pattern that you recognise down at these lows here. You know, that bar isn't a hammer by any stretch, but it does start to kind of like now. I'm not saying that this is a trigger. What I'm saying is that this would start making me get up and start thinking,
pay attention.
Is there something to pay attention to here? And then when you get this higher low here, and then this bar, which is an engulfing body, that would be the move that I'll be most interested in. You know, I think that's the safer place to get in. You know, particularly if you're sort of like drawing trend lines and stuff like that. It might even be here. But what it would indicate is that there's a chance. You know, we've got sort of players coming back into the market at a hold point. And it could precede another trend, because that's I think what people are still attempting to do is pick up a trend. You know, they're attempting to sort of like pick up a higher low. Exactly, Lewis. Exactly. So you sort of see the higher low. So it kind of precedes everything else. You know, it's an indication that something's going on. Now, when we come up,
for very good reason, because you know, Uh-huh. No, I shouldn't say it. Yeah, I'll say it. I'm not a proponent of it, but the trend is your friend unless
Yeah,
it's not.
yeah, yeah, yeah,
So,
yeah,
so really, you've got to go with it at the end of the day.
yeah. Exactly. Now here the volume is, you know, and you'd want to do a proper calculation on this. If there's a way to put a moving average on this, even better. But what you can do is download the volume data and just do your own average. It's not that difficult to get. So you get this again, and we're probably looking at volume spikes here. Now look at what that bar was. This bar here, big red bar. And that again at that precede, and so it was quite quiet until that point. So the first volume extreme was this bar here, and there's even one here, but not so clear. But that one's quite a clear sort of indication of what's going to happen. And it comes down, and then the volume starts to die off a little bit. And then look what happens here. Look at the rally on nothing. It was rallying on nothing. So when you start to see another volume spike come in, this is suggesting that there is selling coming. You know, it starts to come up again, more selling coming. Another spike, another move to the upside. Look at the low volume here on that move to the upside. Then it starts to ramp. And look what happened next. Ramping up on volume with a move to the downside. Big volume spike here.
Yeah, it's coming spinner stuff, isn't it? Really.
Yeah, and look at this. Look at what happens here. Now, look at this. And this is where I think it's interesting. It is not a timing tool, but look what it does. Look what this volume kind of tells you. Big volume spike here tells you that, okay, these guys might have got their timing wrong, but this low was broken marginally, but not really. It ends up holding, then there's a rally. And then again, it starts to pick up again. A big volume coming down here as the market's coming down. And if we look at the most recent data here, so we're currently in the 9th month. So we want to go back to the sort of from the 7th. But you know, I don't know whether it illustrates it, mate. But I'm hoping that you can see why I sort of go with 2 months, because it just seems to be just enough data to not get a murky kind of picture, but not so far back that the volume becomes irrelevant because of, you know, events that have really passed.
Yeah, look, as I said, I've never used it because I've never seen the need to use it, but I can totally see how it is relevant to what is coming next.
Yeah.
So
well,
in that regard, it does interest me because I'm not a massive fan of momentum indicators or, you know, trend indicators, because really they're telling you what's already happened.
Yeah.
But this is tending to suggest that warning, Will Robinson, something is about to happen, and that's what I like. You know, that's cool.
Exactly. And you know, and if you look here as well, the volume here, the most recent sort of volume here, look what's happening. And then we've got this kind of going on where there's nothing above the average, nothing at all above the average, which, I mean, this was a slight sort of move above the average of the within the period, but there's nothing really here. In actual fact, you'd be going back 60 days, so it'd be, you know, coming into this point here now. But there's not a lot of volume here. So what this is kind of saying is that if you were to sort of, like, you know, have a look at the trends here, look what tends to happen on low volume. The market is much more likely to rally. When there's sort of like low volumes going on, it's much more likely to sort of like move up. So this is sort of suggesting that there could be just an easing back to the upside. You know, maybe the concern is drifting out of the market slightly, and we start to drift back to the upside. So, you know, difficult to know right now, but I sort of want to see another volume spike before there was a suggestion that we were about to take another leg lower.
Yeah, that's really interesting.
Yeah,
I like that. I mean, right now, and I'm a bear, right? If I were to look at that, I'd say, okay, the highest volume right now is that bear bar from yesterday. So I would be paying attention right now.
Yeah, well, yeah, but then look at the bar, actually the highest volume.
Sorry, I've got that wrong. It was
Yeah,
the day before.
is this hold.
Okay.
You know, and we've seen what happens when we get these bars where there is a spike in volume and a hold. I mean, we'd have to genuinely go back. This is pretty much the kind of 60-day period. So where's the average of this volume? It's probably there. So it's probably just above the average, you know, this particular hold. But it does suggest some upside. And as I say, that the general kind of view here on the volume is quite light. You know, if you look at the previous sort of like periods, it's quite light, the volume here. So it does suggest another easing up again. Now, I'm not saying necessarily that we're going to get back up to these levels, but to look for downside when you see this bar here on this high volume, and the overall picture tending to be that you know, volume starts to come off when you see these rallies, it would suggest to me that we've maybe got some further upside to go.
Well, that's handy, I'm sure.
I mean, you know, do your own research and all that.
I'm not in the market until that yesterday's bar was taken out, so I'm okay with it.
Next FOMC will be key move, and that's Lewis is absolutely right. And this is where we sort of like start to marry up why there might be light volume, because as Lewis says, the next FOMC will be the key moment. So next week.
That's next week, right? Yep.
What's that? Yeah. And we'll anticipate a spike in volume next week. We'll anticipate that it could drift a little bit, the volume, you know, where people sort of they're not really positioning themselves per se. And then all of a sudden, bang, you see it, you know. So if they're not really positioning themselves, because the magnetic pull of the market is up, that also sort of like starts to suggest that, you know, we should maybe see this weekly pivot. We might even see the monthly pivot before next week. I mean, if we haven't, if we've stopped here by next week, then you'd anticipate a big spike to the downside. But that's the way I'm reading it anyway, mate.
Yep, no, all cool. Thanks, mate, for that. That's really good.
No problem at all.
As I said, I'm short underneath that yesterday's bar, so I'm not really concerned at this point. If it does go to the weekly pivot, as you suggest, I would be happy. That would be really good. Might get a better entry. That would be cool.
Look like going to be hawkish on the rates. Yeah, it looks like it's going to be hawkish. How hawkish the market?
Well, that's a really interesting one. Is it going to be 50, 75, or 100?
It won't be 50. You know, and I say that with confidence. I don't think there's a chance that it's 50. There's a chance that it's 1, and I think that's the problem. If it's a ton, then the market's in a lot of trouble. If it's 75, we might live to breathe another day, and I guess that's what's going on. You know, we got this huge inverted head and shoulders here as well, and we are right at the bottom of the right shoulder, so that does also suggest a bit of rallying. But no, 50's off the table, mate. I think 75 is probably the most likely. The next FOMC is on the 21st, to my knowledge, Lewis. So that is in a week's time.
Just point out to you, if you within your 60-day cycle there,
next week,
the most dominant chart feature is a head and shoulders, which has now been retested, and that's where you got that selling bar, right?
Yes.
Just draw that out. So
yes. Yes. I see where you're looking. Sorry, mate, I was looking on the Zoom rather than on my screen. Yeah. So you basically got to what you're talking about is, let's see if we zone in, if it's any clearer. The head and shoulders here is the ones that you're referencing.
Yep.
And you're absolutely right. When we start to look at this, then it's tested the level. I mean, you know, I don't know whether it's significant or not, but if you think about where these things came from, head and shoulders is Dow theory, and Dow didn't have currencies to deal with, you know, so we're looking at an index here. So when you're saying that it's the most dominant feature, I wonder whether there are more head and shoulders on in currencies, in indices, sorry, than you'd find in currencies. Possibly. I've never tested it, and I wouldn't know. Look how strong that level is, mate. Just you know, looking at the screen
100%. There. Well, and look what happened off it. Bang.
Yeah. I mean, you want to trade a technical level. That's the place to be. And this is the interesting thing, you see. The CPI data came in hot, and then the panic started to set in. But you've also got to consider that there was a technical level that it could have reversed from. So there's probably likely to be lots and lots of orders that were kind of closing out along that, purely because of that as well. And this is where the technicals meet the fundamentals, and you get this this kind of beautiful moment where the unstoppable force meets the what's the I can't think of the other term, the other thing, but it's like, it's like the Big Bang, isn't it?
Yep.
So that would also suggest that there could be some retracement here.
It's funny, isn't it? And we each look at the chart in different ways, and I think we're at the point where we actually don't know.
No.
And that's that's where I started this conversation with. I'm not sure what the market sentiment is at the moment, and I think we're still there. We haven't solved the thing.
I think it's hope. I think the market sentiment's about hope. I think that the fundamentals don't really point to what the market really wants or is after, but it's just hoping. It's just clinging on to whatever it can. See you soon, Lou. See you soon, buddy. See you in Bali. Well, we'll see you before that, but yeah, it'd be great to have you in Bali, mate. I'll be there.
Cheers, Lewis. Yeah, look, I think the theme remains the same, and nothing is 100% clear right now. It is polar. It's US dollar. It's still US dollar.
Yeah, totally agree.
Wherever that goes, if you're trading in that direction,
when that thing flips, there is going to be a party.
Yeah. I'll be there at the party.
Yeah, I mean, it's just going to be just get short. I mean, it's one of those, isn't it? Don't over leverage because you don't need to. Just get short, and you'll make money because it's going to come down, and it's going to come down hard.
Well, in my humble opinion, yes.
Well, it will eventually.
We can't say it for yes. I mean, it has to.
Yeah.
There's no stopping it. It has to happen.
Yeah.
Read everything you like about dynasties and reserve currencies and what happens when you print too much money. Everything is lining up for a US dollar that's worth jack.
Yeah.
Timing. How do you get
all
that
about
right?
Timing? Yeah.
And as you said, at the moment it's red hot, and it's very, very difficult to trade against it. It really is.
Yeah. Impossible task.
But the good part about that is the red hotter it gets, the better it looks for gold downside, NASDAQ downside, S&P 500 downside, Aussie 200 downside. So I'm more than happy with that, because I think there's some good opportunities there still.
Yeah, I think you're right, mate. I think it's a dangerous area because so many things are at significant support and resistance levels. That's true. And it becomes harder to trade and really plays into our hands in some respects, because we are on an intraday basis. But I think for people holding longer term, tough deal. US dollar has been holding strong for so long. When do you think it will break? And that's the question, isn't it?
That's the $1 million question. 100%.
When will it break, Jenny? I'll tell you when I believe it's going to break. And you'll be able to front run it to a degree when you see inflation numbers come off a little bit, and recession really start to pick up. If recession accelerate, if the growth numbers accelerate and inflation numbers start to tank, the next move from the Fed will be anticipated to be a hold or a reduction in interest rates, and that's when it's going to come down. But there'll probably be something else as well. I mean, it's an impossible thing to say exactly what's going to do it, but that's the first sort of thing that I'd look for. Maybe some sort of like loosening of policy, or at least suggestion of loosening of policy. We haven't had any of that yet. But if there's a suggestion that we could get a little bit looser out there, then I think that would affect the dollar negatively.
Can't wait.
Yeah.
I have dreams about this, right? No, just kidding. But Look, it's coming. It's like what's that show? Game of Thrones. Winter is coming.
Yeah. Well, it is quite like Game of Thrones, where different factions and different families kind of rise to the top at different times. But there's certain currencies you just wouldn't touch for a buy side right now, and the pound's one of them. And obviously the dollar's on completely the flip of that. But yeah, it's just a waiting game.
As always, it's interesting, and there'll be little things we can do in the meantime to keep ourselves amused, no question. And I would suggest that nothing really changes at the end of the day. If you've got to set up trade it, everything's fine. And look, there are great trends going on at the moment. There's no question. If you're a trend trader, I think you're doing okay, or you should be doing okay. And if you're a range trader, look, as Ash just said, we're now at resistance and support levels on quite a few, well, for me, currencies, and indeed indices. So it's not a real rocket science exercise. Once you've got those reversals, look for the lower highs or the higher lows and take advantage of them, because that's pretty much where your next move comes from. So I'm in a pretty cozy position. I haven't got a trade in the market at the moment, apart from the pound breakout thing, which we'd better have a look at, I suppose, before we go.
Yeah, let's check it.
Bang on entry at the moment. We've had, as expected, a bounce off the daily pivot. I can't. There we go.
You sharing? Just stop sharing.
Just about to. There we go.
There you go.
So we've had a bounce off the daily pivot after entry. We're bang on entry at the moment. As you can clearly see, we need a bounce off here to get us to TP1, at which time we'll move our stops to entry, and we're looking for 2.5 to 1 profit. Has been a good week for it, mate. 2.5% there yesterday, 2.5% the day before.
Oh, fantastic.
I mean, I wasn't trading at 1%, but once we develop this into a system, there's 5% in 2 days.
Is that because of the moves to the downside, mate? Is that what it would have taken advantage of? Is that what it did take advantage of?
No, not at all. Because, well, yes, it did take advantage of it, but I mean, the take profit is here somewhere. We're only looking for that. Remember, we did an exercise months ago that suggested that 2.5% was the sweet spot. Well, that's what I'm using at the moment. And yesterday, it worked absolutely perfect. The entry was exactly where it was today. So 1 to 1 was about here somewhere, and 2.5 to 1 was just underneath the daily pivot.
Oh, perfect. Brilliant. Yeah.
And look what happened.
Yeah.
Did exactly that.
Well, this is the thing, isn't it? If you're sort of testing a strategy, you kind of have to test it in percentages rather than levels. It's a very difficult task that becomes. Whenever I'm doing a spreadsheet on a strategy, I can't do levels that easily, because you've got trend lines, you've got trade lines, you've got pivots, you've got EMAs, and it's very difficult to sort of say take profit at this particular level over the percentage. I mean, if you string them out, that is obviously if you got 1 or 2, not a problem at all. But when you sort of if you were to add everything to really kind of pinpoint where it is best to come out, then it becomes tricky. And if you're a trend line drawer, really hard to kind of define that on a system. That's
why we can't put the slingshot on a robot. See, it's impossible because of the way I trade it.
Yeah,
can't be done. Well, there's probably a genius out there that can work out how to do it, but you'd have to be pretty good to beat Peter.
Yeah, well, I'll tell you who else is brilliant is Lloyd. Lloyd's kind of very, very good at writing strategy parameters into MT4. He's brilliant.
Yeah, I think he just threw his hands up at me years ago and said, "Don't be stupid."
Yeah,
I can't program what's in your head.
Yeah,
simple as that.
Yeah.
All right, we better get out of here, right?
Cool, mate.
Time's up.
All right. Thanks so much to you to being my trading buddy and the guys in the room. Nice, relatively nice numbers today too. So thank you to Marlon for looking after us this week. We'll be back on Monday. Oh, no, we won't, mate. We won't be back Monday because
what's
it's a
happening?
bank holiday.
What do you bloody things have bank holidays all the time? Oh, this
Yeah,
is
do you know
because of Lizzie, is it?
Because of Liz. And no, I don't mind popping in if you want, but we are off.
Mate, if there's a bank holiday, guess what? It's our holiday as well.
That is the rule, isn't it? Because the FTSE's closed, so it's going to be it's going to be very quiet. So let's so we'll see you Thursday, guys. We'll be back a week today.
Happy days.
For FOMC.
Have a super weekend. And as I said, thank you very much for being our trading buddies. We do appreciate it. Don't forget, it is your show. So chat to us. Put in the chat box whatever you want. Well, within reason, you know what I mean. You can come on camera. You can come on mic. You can show us exactly what you're looking for. And your input. We love it. Thanks very much. Have a great weekend, everyone. See you on today week. Bye-bye for now.